Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a fresh new week, and it's the week before, the happy festival of Diwali as well. So lots lined up in terms of interesting programming, content through the course of the next 5 trading sessions and beyond. I'm Prashant, with me, my colleagues Nigel and Reema is with us today. Guys, morning.
Hi, morning.
Hi, good morning. I think this weekend was a reminder, I can't say a gentle reminder, but that the tariff risk is not dead, as of now. So Dow Futures is rebounded, but look at Asia, it's selling off fast and furious. So I think it promises to be a very interesting session.
Well, that's right. And we don't know whether taco is going to happen yet again, or this time he's going to stick to what he's saying, because there's been a lot of flip-flop just in the last 12 to 15 hours itself. So we'll have to see.
I know this morning I was thinking when I had to present it, I would go in the chronological order or go reverse order. So because both will work. But it's a lot of stuff to digest. And it's all kind of happened. The good thing, the silver lining in all of this is, as we if markets were trading the last 2 days, you'd know what to make of it. But as we come this morning, there is a little bit more clarity in terms of where this perhaps is going. So that's how I would look at it. Now, low volatility calm was broken by a tariff headline redux, right? I mean, markets were nice, absolutely oblivious of anything which was happening. Tariffs were ignored, what effective rate, etc. All that had kind of sort of faded into the background. And it was largely a very nice move, especially in the US markets and, of course, around the world. I mean, Europe was breaking out. Asia, of course, has done fantastically well, of course, with the exception of India. US-China clash at the forefront once again. So Trump basically said that he's going to impose new additional 100% tariffs on China with effect from 1st of November. He also basically said that critical exports of software, etc., are going to be banned. President Trump said this new 100% tariff, in addition to what is already there, is in response to China's rare earth restrictions. Now, China on Sunday, that is yesterday, put out a statement saying that its actions were in response to US's actions, which came a few days earlier. So, who started this entire thing? Both are saying, well, our action is response to your action. It's like chicken and egg. In any case, this morning, there seems to be a bit of walk back, a little bit of, sanity. So President Trump's post on Truth Social appears to kind of walk back on his threat of this 100% tariff. That's essentially the post that I want to highlight. And he says, don't worry about China. It will all be fine. Highly respected President Xi has just had a bad moment. He doesn't want depression for his country, and neither do I. The U.S. wants to help China, not hurt it. President DJT. So, this looks like he's not really... the hope is that this is the first step in perhaps de-escalation with regards to this 100%. It's like, what was that tariff, right? 140%, doesn't matter, because at 100% no exports will happen. 140, 200, you can take it to 500, doesn't matter. And the additional new 100% tariffs are just disasters. So the hope is, with what we've seen with President Trump posting this morning, that perhaps he's appearing to walk back on his tariff threat. The one thing which I think is very clear, which Reem also highlighted, is that this tariff complacency was kind of exposed with Friday's sell-off. And the interesting thing is, and the complacency was there, right? The rare earth restrictions, China's rare earth restrictions came on the 9th of October. Markets didn't move. They just kind of ignored it. They only reacted when Trump reacted to China with his threat. And by the way, the markets reacted to the threat. The actual 100% announcement came after US markets shut. So this is the reaction to the threat. On Friday, sharp sell-off. S&P had its worst day since April. It was down 3%. Nasdaq was down 3.5%. Russell 2000 was down 3%. Wix, as I said, was very low volatility, nice trending higher market. It jumped 32%. So big one. You had oil prices which fell 4%. Yields sold off 10 basis points in the 10-year. Dollar index was down 0.6. The entire shebang, basically, the entire macro complex reacting, moving in one way like it used to around the Liberation Day, etc. But since then, you know, sort of it looked like the markets have kind of sort of moved on and put all this tariff, etc. behind. I think we perhaps this morning, with President Trump's not clarification, but essentially, you know, his outreach to China and saying, well, all will be fine and, you know, they don't want it, we don't want it. Perhaps implication being that something will be worked out. Perhaps start off on a slightly better note. Had this post not come this morning, I mean, I think perhaps the reaction would have been a little more sharp. So I'll just tie in the levels here. We've had a nice move on last Friday, the last trading session. The Nifty took out the earlier high of 25,220, which was the high which was made last week, the weekly high. The next stop, the next resistance in that sense is 25,652. So not in a hurry, some distance between where we left off and, of course, where this level is at. Support remains the same, 25,008. The Bank Nifty, it closed above the previous high, like the Nifty, of 56,502. The next stop is 58,163. Again, not nearby, but we've had a nice, decent run. And if the markets got to break out of this range, I mean, you know, the extension levels are higher for both the Nifty and the Nifty Bank, and the support at about 55,821. That's the levels as far as the Nifty and the Nifty Bank go. GIFT Nifty is, I think, indicating about a 100-odd point lower start, and we'll pick up from there. But as I said, with President Trump's post this morning, I think markets will be hoping that this means de-escalation and not further escalation. But how's the F&O positioning looking like? Nigel's walked across to the wall with exactly that. Nigel, over to you.
Well, you know, year to date or even in the past 1 year or so, India has underperformed. I think now the time has come probably that we could outperform from here on. And the reason I say that is that a few factors are moving in our favor with regard to liquidity, with regard to flows, and with regard to the other data points as well. So Brent crude prices moving down is good. Dollar index has cooled off a little bit, and the 10-year yields as well has cooled off. So the troika is well behaved, so to call it. But the bigger positive is with regard to what's going on the flows. The FIs, remember, they were net selling 2,500, 3,000 crores. That came down to a net sell number of around 1,500 crores. Then they were selling closer to 500 crores. And now that's done a U-turn. And now we have positive FI flows. And mind you, this is the fourth straight day that we have positive FI flows. So you like that, because remember, they have been underweight on the Indian markets and they have been selling all through the year itself. So the FI is turning a corner. We'll keep an eye out on that, whether or not that can hold, and it has more ground to go. The short positioning, that's something that we have been highlighting. And just in the last week, take a look at the shorts that have got covered. From close to around 2 lakh contracts, we're close to around 1.8 lakh contracts, which would effectively mean close to around 8% of their short positions have got covered out. But even after this sort of short covering, still they're aggressively net short, right? They have 1.8 lakh contracts on the short side. In percentage terms, that's close to around 92% of their positions are still on the short side. So the FI is buying in the cash market and in fact covering their shorts. That spells some good times and gives you some kind of cushion. Even on stock futures, if you look at it, earlier they were selling in cash and they were long on stock futures. Now it seems they seem to be reversing that arbitrage, because now they're buying in cash and there is some kind of covering that we have seen in in stock futures itself. So the bit of a short covering bounce did play out there. The FI as well on index options as well. As we've been seeing the last few trading sessions, they've started writing more puts than calls. And because of that, the PCR that had come down to around 0.85 middle of last week, that's moved back up to around 1.3. Because the put writers, they feel they're back in the game. Whether you're looking at the 25,200 put, 25,250 put, 25,300 put, all of them were fairly active. Now, if you want to look at a tighter range, last week's low becomes important, which is close to around 25,000 odd. So that's the reference point you have on the downside. You know, you'll want the Nifty to make a higher high. And the high that it made in Friday's trading session was 25,330 approximately. But if you're looking at a range, then the recent high at around 25,450, that becomes a level of resistance. So they're going to be important which side of the band we can break. Moving to stocks that I'm looking at, well, a couple of them will be in focus in today's trade. Saman Capital, that's back in the F&O band. The stock has been a bit of a range. Keep an eye out on that one. The other stock we look at is Tata Motors, because tomorrow is the record date, which effectively means today all the future contracts will expire today. So they're having an expiry for Tata Motors in the futures market. And if you want to play that demerger, well, today's the last day to buy it. And finally, since crude oil prices have cooled up, I'll keep an eye out on OMCs as well, whether or not there is some interest on these names. So those are the bunch of stocks that I'm looking at.
Thank you very much for that. We should pull up Asia once again. So despite the conciliatory tone coming in from Donald Trump, Asia started off the week on a shaky footing. Hang Seng is down 2.2%. The Taiwanese markets 2% now down on Hang Seng. Taiwanese markets 1.6%. Shanghai has opened with a cut of more than 1%. The Dow futures, though, is still up nearly 400 points. But this follows a decline of 900 points almost in Friday's trades. So it's rebounding, the Dow futures, but not to the extent of the fall that we had on Friday.